Hey, good afternoon, everyone. This is Trader Tim from E-mini Mind, bringing you a Monday market analysis video. Today is July 11th, 2016. A pretty slow news week to at least start things off. This week we've got Thursday and Friday jobless claims, consumer price index, and retail sales, but not a whole lot going on Monday, Tuesday, Wednesday. So we will anticipate not a ton of drastic movement, at least while we're up here at highs. Today we had a little bit of a kind of a spinning top, so potential for some kind of, maybe a little rollover or sideways consolidation, which would be nice to see to kind of develop a base, if you will, along these highs. So we have something to rest on. If we look at the calendar, we are coming into options expiration Friday, and we've got some news later in the week, so that Thursday, Friday should be pretty good in terms of the volatility and some catalysts that could push the market either higher or pull us back. I've got a 50% retracement drawn up at 203.25s, and that gives us a target at 21.75s. Not too far away from here. We are pretty much in clear sailing territory. If I go to a weekly chart, you can see that we are up above highs from last year on the E-mini S&P. So lots of room above us to move up to that target. Like I said, it'd be nice if we had a little bit of sideways consolidation. If we were to pull back, down to the 2100 level, I wouldn't be overly concerned, but having a nice couple days moving sideways, maybe a little bit of a bull flag taking us into options expiration, even a couple days of selling to put in a higher low here where we could then buy on a move higher would be a nice scenario. I wanted to talk about today's price action on the 5-minute chart, and that same concept of buying on a pullback is relative on the smaller intraday time frames, and that's something I talk a lot about in the Tuesday live trading session over at eminimind.com/VIP. And so today, it's when the market opens, I like to kind of get an idea of the speed or the pace as it first opens, and then what I like to do is draw up the first 30 minutes, just mark that high and mark the low. And so that gives us kind of a range for the morning. And in this case today, we were about 21.27s up to 21.32. So it was a pretty tight range. And as long as we stay within that range, we can expect things to be pretty choppy in that we may not be going anywhere. There may not be very good setups present. There's not a ton of opportunity. But when we break down below or above that range, that's when we start to get some good action points, especially right at the top and right at the bottom. So being that we gapped up this morning, and there's a couple different options here. We gapped up. You could take from yesterday's close to highs and draw a 50% retracement and perhaps look for an entry just on trading hours only alone at the 21.26 level. Another option was to, let that morning session kind of settle out a little bit for the first 30 minutes. And as we broke down below the first 30-minute range, it was immediately met with buying. And we had this relatively big selling candle down to the bottom to what was the open of the day. And as soon as we broke down, this tail is indicative of buyers coming in, stepping in, and pushing the market higher. So if you're not comfortable getting long at a 50% retracement, you could wait till we get a little bit more confirmation in that we have a 5-minute candle close. And since it's the lowest candle in this little pullback, and seeing as we had gapped up from the prior day, so the current trend is moving higher, at least relative to yesterday's close, as we back up here. Getting long by putting a buy stop above the high of this lowest bar in the pullback, which also happens to be right at the first 30-minute range's low, and the hammer formation, allows us to get into the trade at the next candle because the hammer has formed and then the next candle starts to form. So then putting a buy stop above highs allows us to get in as the market is moving in the direction that you want to go, which in this case is up. And then with a buy stop just 1 tick above highs and a 6 tick stop, that keeps us in the trade. And then the way that I manage the trade is with a trail stop. And if you want to be aggressive, after each candle begins to form, then you can take your stop and move it underneath the previous candle. So we started off with a 6 tick stop. The next candle is our entry candle, and it got us into the trade with that 6 tick stop. As soon as the next candle forms and breaks that previous candle's high, you can take your stop from -6 and move it underneath this candle's low. Now we have a new candle that starts to form. It breaks the previous candle's high. You can take your stop and move it under the next candle's low. And you can just keep doing that, and you can see how these lows are never broken on the way up until we get up above the first 30-minute high. And when we get into these situations here where we have a candle where the next couple of candles are inside bars, and in this case we had a good amount of consolidation that is all within this candle's range, that's why I let the candle break the previous candle's high before moving my stop, because that will keep us in when we get this sideways pause or consolidation, and it lets us tighten our stop a little bit more once the trade then breaks out and continues in the trend. You can also trail swing lows. So you could let the market move up, and then once it pulls back and makes a new high, you can put your stop underneath the next swing low. Then we pull back, make a new high, put it up underneath the next swing low. We pull back, move to a new swing to a new high, and you can trail the next swing low. So you can just keep doing that all throughout the day until your swing low is taken out. And both of those methods are, again, they work with the smaller time frames, like a 5-minute or a daily chart with swing trading. So that's kind of how I look at the markets on both an intraday and a daily basis. And so as we go through this week, tomorrow we'll be doing another live trading session. We'll be looking for maybe a tighter range-bound day, but even if we get a little bit of a pullback or even a couple days of pullback, as long as we're hovering around this 21.15 level to 21.30s, I would see maybe a couple days of consolidation and then moving higher. But evidently, or at the end of the day, we're looking for that 21.75's long target, and then we can draw up the next 50% retracement from lows to highs, get a little bit of a pullback, and get in once again on the daily chart. So if you want to join in the live trading, emoneymind.com/VIP. Shoot me an email if you have questions, tim@emoneymind.com, and we'll talk to you tomorrow morning. Thanks. Have a great night.